Yes, tune back again. If you are a student, if you are an ambassador of CPA, ACCA, and we are still on the topic of accounting for assets and liabilities. Accounting for assets and liabilities. And today we are going to see or tackle the topic of bank reconciliation. Subtopic of bank reconciliation. Bank reconciliation. Bank reconciliation is under the accounting of cash and cash equivalent. Cash and cash equivalent. Cash and cash equivalent. Cash and cash equivalent. So why is the companies need to do bank reconciliation at the end of every month, at the end of every quarter, at the end of every year? The first reason here is to check whether their transaction is corresponding with the bank transaction, because we have two parties here. We have a party, which is party A, which is a company, and party B, who is a bank, So remember, the level of trust here might not be 100%. The level of trust might not be 100%, and therefore this person will have to counter check whether whatever this person is doing is corresponding with that. That's why now we bring in a bank reconciliation. A bank reconciliation. So for this, you have two steps. The first step is to do what is called update the cash book. Update the cash book. So why are we updating the cash book? Why are we updating the cash book? Why are we updating the cash book? We are updating the cash book because they are some of the transactions which the bank have effected, but it is not reflecting in our current cash book. Example, bank charges. Bank charges. So we have to credit these bank charges because it is reducing our current balance in the cash book. It is an expense. So we have to credit that bank charges. Not forgetting that we have a balance here, which we already have it at the moment in our cash book. So we have a balance here. The balance, we normally call it balance brought forward, but not at the beginning of that period. Not at the beginning of that period. At the time you are preparing that reconciliation. So you already have the balance in your cash book. That's what we will put here. Another transaction which you don't have in your cash book and the bank has already effected is standing orders. Standing orders. We put here standing orders. So what are these standing orders? You give bank instructions to pay someone else on your behalf without even informing them, or without bank informing you as a company. So that's what we call the standing orders. You will only get it once you get the statement from the bank. And then another one is the dishonored check. You might have dishonored check. So dishonored check, it can affect either debit or credit. It depends. Another one is the direct debit. There is always that customer who will not bring a check to the company, but they will decide, why should I do all this work? I can take this check and deposit direct into their account. So you will not recognize in your cash book until you go through the statement, so that you find that there was a deposit made by this customer X on this date. So you have to update your cash book on the debit side. You might have another items which it affects the cash books. the cash book, maybe overstatement or overpayment. You can have the overpayment, so or overstatement. So we have other items which might affect the cash book, but these are the major ones: bank charges, standing orders, and the direct debit. So at the end, you will get updated balance. So this updated balance is what now we are going to reconcile with our bank balance, So once you have this, now you can do bank reconciliation. Can do bank reconciliation. So once you have this updated balance, you will come here and take that balance, updated balance, and then we add back unpresented check. So there might be check that you have already effected in your accounting system or in your cash book, but you have not taken it to the bank. So we add back that so that we reinstate back this balance. And then we have uncredited check, less uncredited check, and credited check. So these are the check which you have deposited already, but the bank are not yet deposit into your account or credit your account. And then we might have having other errors like bank in favor and bank in disfavor. It will also affect our bank reconciliation. So at the end, this is what we have it as a bank balance, or balance as per the bank statement. Balance as per the bank statement. So let's look at the illustration questions. The illustration question, I will share it in the PDF so that you can be able to view before we look at the solution. So the question reads that bank statement of Maji Mazuri Enterprises as of 30th June 2023 showed an overdraft of 23 or 2.324 million, while the bank balance as per the cash book showed a credit balance of 1.108 million. The following extract from the cash book of Maji Marefu Enterprises for the month of June 2023 was provided. So we have a cash book extract, which it will not be of any use because we have already been given the balance there of 1108,000. So if you check the 1108,000, which is the same with the balance as of 30th June 2023. So we don't have to do anything with that extract. That we have been told upon investigation, the following matters were discovered. Number one, a check received of 160 had been returned unpaid. No adjustment had been made in the cash book. So that one is that there is a check which you deposited, but it is not going, or the bank has not yet effected due to some of the reason which it is we have not been given. So what do? This was a deposit. So you had already debit in your cash book. Now you have to remove it by crediting your cash book. Number two, during the month of June 2023, dividends amounting to 124,000 were credited directly into the bank account, but no entry had been made in the cash book. These are the direct payments we have to recognize in the debit side of the cash book. Number three, a check drawn for 12,000 had been incorrectly entered in the cash book as 132,000. So we have to correct that overpayment. The balance brought forward as per the bank or as per the cash book was overstated by 100,000. You also have to correct that overstated. Bank charges, we say bank charges, you don't think twice. You just checked into the credit side of the cash book. A check drawn amounting to 554,000 had not yet been presented to the bank. That is unpresented check. Check received totaling to that or 24,000 had entered in the cash book and deposited in the bank, but were not credited until 5th of July 2025. So that is uncredited check. A check of 54,000 had been entered as a receipt in the cash book instead of payment. So that is the wrong principles of accounting. So we have to do a reverse of it. A check of 50,000 had erroneously been debited by the bank into Marefu account. So that's what we call the bank in disfavor. Required adjusted cash book balance as at that 30th June 2023. Very nice, very nice. These are very simple questions. Very simple questions if you are doing a CPA. And even if you are working and you want to do a refresh on bank reconciliation, this is the best for you. So you write Marefu Enterprise. Updated cash book. Updated cash book as at 30th June 2023. As of 30th June 2023. We got debit, credit, and the debit. The balance as of this date, it is on the credit side. So we have balance is an overdraft. Balance of, which is an overdraft. Balance of 1108. Don't forget to show 3 zeros. Don't forget to show 3 zeros. So let's see the discrepancies or the investigation. Number one, we have the check which they have already deposited here, but now it is not going through. So we have the returned check here. That is 160. During the month dividend, we say direct debit. We put here direct debit of 124. A check drawn had been incorrectly entered in the cash book as 132. So this was a check, the payment check, which they are already credited here, but they are credited 132 instead of 12,000. So we'll have to remove that extra payment. So we will do it by debiting overpayment. So which will take 132 minus 12, so that you arrive at 120. The balance brought forward as per the above cash book was overstated by 100,000. So this amount has been overstated by 100,000. So we have to do a reverse entry by debiting overstated balance. Overstated balance of 100. And then bank charges, you say bank charges, we credit the bank charges. Bank charges of 272,000. Check drawn amount that is unpresented, it will not affect the cash book, and credited, it will not affect. Number 8, a check for 54,000 had been entered as a receipt in the cash book. Has been entered as a receipt in the cash book instead of payment. So they have already recognized it in the debit side here as a receipt, but it's not belonging to this debit side. It should be on the credit side because it is a payment. So we'll record here. Just say check payment. How much should I record? How much should I record? Let me know in your comment section below. How much should I record? How much should I record? Should I record 54? No. If I record 54, I will cancel that transaction because it is already here. 54 is already here. So if I do the same and record 54,000 here, I will